Are you curious what's going on with the local San Jose real estate market now that we've been in shelter in place for almost 12 weeks? Are you curious what the market is doing, how it's behaving, and what changes we've seen? Well, stay tuned as I go through real live data to show you what's actually going on. Hi, I'm Theresa Wellman with homeownerexperience.com, and I'm a local San Jose, California realtor. Today, I really want to go into the market stats and data to really understand what is going on in the local market. I love to look at data, and I think it's really important that buyers and sellers out there understand what's really going on in the market and not maybe what the news is saying or data that the newspaper talked about that's 2 or 3 months old. Let's talk about real data that's just been published and what's going on out in the field.
Okay, so we're going to start here with an overview of the market from March 1st, 2020, all the way through May on the 31st. So what we have here is a reflection of new listings on the market, the blue line, sold listings, the yellow line, and then purple and red are houses that were pulled off the market. So as you can see in the very beginning of early March, we had a really nice weekly cyclical with of new listings coming on the market and a consistency of sales as well. And then as soon as the shelter in place hit, you see marked with the red dotted line, a lot of people removed their properties off the market, even with the word, I guess the announcement a couple days before, people pulled their houses off the market. And then immediately new listings also dropped. Now, sales weren't affected immediately because remember, this is the date that properties actually close escrow. So they got into contract about 30 days before that. So if you note, we didn't see a slowdown in the number of sales until about a month into shelter in place, which would make sense because the new sales probably slowed down right here. Now this chart isn't showing that. This is showing new listings and closed sales. But what I do want to point out is some perspective of the listings have started to return back to a much more normal number, just especially these last 2 weeks of what we saw before the shelter in place. And the sold listings are also getting very close to that. So this here is talking about the new homes that were listed comparing last year to this year over the same time frame, adjusted for the days of the week. Because as you can see, most people put their property on midweek, not over the weekend. They want to get it on before so that buyers can see the property over the weekend. So the orange line is this year, 2020, and obviously the left side of this graph is when we were in shelter in place. This starts on March 16th. It starts on the Monday. And when showings resumed, which was the beginning of May when occupied properties were available to be seen, then we saw a little bit more of an increase in new listings coming back to the market. Possibly some of those properties where people pulled their houses off the market came back, and some of them are just new listings that were returning to the market. But again, important to note is these last 2 weeks we were getting much closer to the 2019 market. Now this third slide is talking about what I kind of hinted to before, is the number of properties going into contract or changing to contingent status, meaning a buyer is now in contract and working through the escrow period. So at the very beginning that dropped off pretty steeply. Then there was a little bit of a spike of properties that sat and buyers jumped in. Most of those sales that first week were actually of properties that were marketed before shelter in place and then went in contract. Then you see those 2 following weeks, it was really slow that new contracts came into play. And if you've been watching my weekly update on my blog, you notice that we've seen a gradual improvement. Those first 2 weeks or 3 weeks, people were pretty afraid and not sure what's happening. Then we saw a next kind of middle phase, and now these last few weeks, we have returned to pretty much normal. Again, the gray line being last year. So this last slide that I want to talk about before we jump into the normal monthly stats I cover is just the new listings versus sold homes. So we had definitely had less listings and about the same number of listings as properties that were closing in the beginning of shelter in place. And now you see here new listings are definitely starting to come back and inventory is definitely coming back. And we're not seeing the impact of the solds yet because now it's just been 4 weeks since that new properties have increased. So I guarantee you the sales have also increased. If we go back to that previous slide here of going to contingent, you can see the general trend is upward. So we will start to see this blue closing line also increase here in the next few weeks. So that's a quick overview of the 5 Bay Area counties and the effect the market has had or seen over this shelter in place. So let's jump right into the actual statistics of May for the San Jose area, talking about prices and days of inventory. Okay, so now let's review the San Jose market prices and days of inventory and sales price to list price. So the numbers that you see on your screen are compared to the previous month. So we're looking at May closed data and comparing it to April. So the average price is actually down 1.8% and the number of sales were down 19%. But I want to compare that also year over year, and it's a little bit different picture year over year. The interesting thing is prices are actually up 4% year over year, and the number of sales are about half. But the interesting thing is the pending sales are only down like not even 2% from normal for year over year. So that's a really big difference, and we'll talk about that a little bit. So the market is heating back up. It's good news. So today's market, as the numbers of days of inventory show, is a soft seller's market because it's up at 54 days of inventory, but that's using the closed data. And as I mentioned, the pending sales are way up. And if you were watching my week by week tracking during shelter in place, I was using the pending days of inventory to get a little bit more current indication of the market, and that is something that we're definitely seeing shifting quickly due to the increased number of pending sales. So here's what I mentioned. Pending sales are up 48%, while inventory is only up 19%. So the sales price to list price ratio in May closings was still 101%. So those are properties that went into contract in April and closed in May. So shelter in place has affected the sales, but they are picking up. There are currently 408 actives and 427 pendings. So we are up to 51% of the homes available in contract, which is really great again. And it was 46% last month. So we're definitely seeing an increase and a recovery as people get used to the rules with shelter in place and things are loosened a little bit more. So let's look at the chart here of data from 2012 all the way through May 2020. And as you can see, these yellow bars here are comparing 2019 spring to 2020 spring. And the green lines are sales, as you can see, typically would pick up this time of year, though because of shelter in place, we actually had sales drop. And typically inventory would sharply increase, and it increased, but very shallow and is way below normal that we would see. This time was about 2017 levels of inventory, which is unheard of and hadn't been seen in 20 years or more. Definitely a unique market going on, and that's what's really fueling the activity and prices because our inventory is so low. So the orange and blue lines are median or average and median prices. And yes, they were peaked in March because those sales happened in February and we were heating up to a really hot spring market, but then shelter in place really slowed things down, so prices did drop slightly. But as I mentioned before, we are up year over year from those prices, even still at this low point here. So that is great news. Now here's the week by week charts that I had been following. I stopped it at week 10 here at almost the end of May because I'm seeing the market recovering back to a pretty healthy normal market. Normally we would be selling about 115 homes per week in May, and the end of May really popped up. So right before Memorial Day, it was 72 homes, but as you see, we're up to 90 and 80. So about 3/4 of the way to normal sales volumes. And in the beginning of the shelter in place, it was much lower. It was drastically slow that first couple weeks. And then we kind of were at less than 50%. And then we started to heat up, as you can see, kind of almost phases where we got into a much better flow of market, and the pending days of inventory got to pretty exciting numbers, about 1 month of inventory. And in this area, we've talked about before that the Santa Clara County home price average is very correlated to the S&P 500 because a lot of home buyers use stock options, and that does kind of affect the market. So as you can see, I had pointed out several months ago that there was a big discrepancy between the S&P 500 and the average home prices. In late 2019, the prices had really dropped where the S&P 500 continued to go up. And then we finally got a spring market pushing our prices up, and then coronavirus hit and dropped the stock market. So we are back at a point where there's a little recovery in the stock market, and the home prices seem to have been settling at a new value here. So that is a good sign that I think those two numbers are starting to correlate again, because as you can see, there's only 5 times in the history of 20 years that these two metrics went in opposite directions. So I think we're going to be back on track here after that discrepancy we've had the last several months. Now, interest rates, of course, are a huge factor to the market. And so here we have a 3.18% average for a 30-year fixed mortgage, but that is a conforming rate. So that is properties that are selling under or with a loan of under $500,000. And in Santa Clara County and San Jose, most people have a larger loan unless you're buying a condo. So the jumbo rates are going to be a little higher than this, but the point is this is a 3-year history. It is at a definite low in a 3-year history. And even if you go back 20, even 50 years, we are at record lows. I don't expect these numbers to stay around too long. It'll be interesting as we recover from this coronavirus effect on the economy, how that trails. But the point is, it's excellent opportunity for really inexpensive money for buyers to get in the market. So one of the factors, of course, that people have been concerned with is a lot of unemployment. There was a spike. This is the April number for Santa Clara County, up to 11.7%. But as I've been saying, this is a temporary unemployment. It's not based on the economy. It was based on the health crisis and orders from the local government to close businesses. Those businesses will be slowly reopening, obviously not 100% or not right away, but I think we're going to see a much quicker recovery of this unemployment. And the point is about 88% of people are still unemployed and not worried about their jobs, and those are the home buyers that are jumping in the market right now. So I really hope you learned something today on this market. It is a good, healthy market, and all the indications are that we will continue to have a happening market here through the early summer. If you like this information, please do sign up for this video to come to your email inbox once a month. You can sign up at bit.ly/REMarketSJ for San Jose. Definitely check out the raw data if you want to look more specifically to your neighborhood, say Almaden or Cambrian, or to a certain city or all of Santa Clara County. You can pull that data on homeownerexperience.com under the Market Stats tab. Please do comment below if I can answer any further questions or explain any details, and I'd be happy to have a buyer consultation with you as you begin to look into the market and study the metrics. So thanks so much for watching. Have a great summer.